All right, good morning and welcome. It is Thursday. It's time for Strategy Planner. This was in my feed, just in. 300 Boeing planes used by United Americans have potentially fatal fault that could cause jets to explode mid-air. So I'm trying to decide if that's just another day or maybe more discounting. I want to look at a couple of stocks before we get started. NVIDIA, of course. GitLab, which initiated coverage formally. We've been looking at it for a while, but initiated coverage formally with a recent post. And just to point out, I'm still not wild about volume. Volume could still be better. Here's where it needs to be better. See how its low volume has undermined it, but it's coming into an interesting spot. Not necessarily downtrending resistance, really. I'm looking at this. So, happening to coincide pretty closely. Around 57, a little bit lower, 56.85. So that's GitLab. Why not look at Boeing before it implodes or explode? Is it imploding or exploding? So we got to a pretty relevant target for this bounce. There's an inverted head and shoulders pivotal correction below. Not a great spot to be greeting this this news. I don't really see it reacting. So maybe it's built in. If it can weather this kind of a headline, I mean, bad for American United and, of course, passengers, but get through 184, 186, that's already met a lot of buying pressure and could be a pretty substantial bottom. There's a 190.55 is the line in the sand. But a lot of upside beyond that. And then, of course, NVIDIA, which didn't have any last-minute sentiment to fade. But it also had not yet, intraday, completed a pullback to 900 that then would have targeted 1,000 to 1015. This is from Saturday. We looked at it Saturday review. But post-close, of course, the earnings reaction still didn't get to 900, but shook it out and walked right back up to 1015 and higher into the 1020s. But they have extra news other than earnings split that tends to have some follow through. But just to point out, it has to clear this area on a closing basis for 2 consecutive sessions before suggesting that there's anything more substantial like an extension of the target. Not eking higher, but actually being able to slap a 61.8 multiple on it. Something like that. So, NVIDIA, not, we'll have to take a look, but not exactly on the list of catalysts, reliable catalysts for the market going forward, which isn't necessarily bad, because as we discuss, when we're discussing stocks, whenever it comes up, such as most recently the Magnificent Seven's outperformance, being outperformance, that is, this is from months ago, I think, at this point, being such a big portion of the market's performance, so much attributed to them, is that such a big risk when, in fact, they never top in unison, and when they do individually, the money rotates out of them and broadens into laggards. So I wouldn't be concerned with NVIDIA peaking, but it's a little late to chase it unless it can get a couple consecutive closes above 1015. Onto the market, We won't really dwell on yesterday. There was a huge drop in the afternoon, of course. This blip down on the cusp coming out of the bias window, the AM bias window, and into the noon hour was kind of a pressure release valve that undermined the signal that we had just been discussing was forming, the alternation roll that was telling us to anticipate from this particular pattern in the morning for the reasons we had discussed in detail, had been discussing in detail, to expect the afternoon to trend sharply, to include whatever it looked like, whatever direction, wherever it was, however it resolved, if it did, a substantial trend. That was the necessary resolution to the morning's pattern. This acted as somewhat of a release valve, pressure release valve to the setup, so it inhibited our reliability on it, but the market took it anyway and included an FOMC minutes reaction. Got down to multiple levels that had been indicated, including to within 3 ticks of unfinished business previously, neutralizing it. Little 5-stager pattern in here. Again, we're not going to go into detail right now, but left outstanding because its break under the afternoon, which is already off the screen, but under the afternoon's 53.32 bias down signal, which was here, too late to trigger it, then probed it, requiring its retracement, but exited the bias window under the bias down target, and so didn't require retracing it, but it's usually going to be retraced anyway, eventually, and we did. It's irrelevant now, but I just want to point, that was a very rare instance where the bias target, even when it's met in a no bias window, very rarely then invalidates the required retracement, and yet still goes on to retrace anyway. It's just not 100%, or it's not as a reliable retracement. Even then, it's neutralized. Its attraction is neutralized at 53.32. And even the 120 print, which was where the market was trading at 120 p.m., when it triggered no bias. All of that being likely to be retraced. That was kind of our, and there it is, 53.32, 53.42, these two relevant levels. And by the way, if you're new here, if you're joining us on a simulcast trial, lot of stuff goes into these numbers, but we have to really focus on today. I just want to reference those two numbers to point out this one bottom line. Those were basically the assurances that we were left with at yesterday's close, cash session close, just before the close, before the last minute surge, that we'd rally this morning. Those attractions above were basically going to be the recovery points for a number of reasons that we went through again yesterday. And I'll share the market wrap link if you don't have it. Number of reasons why yesterday's sellers were weak-handed. We just had a great likelihood. We had neutralized the attractions below. We were really pretty much relying on 53.32 and 53.42 to all but ensure gapping up this morning, which is a necessary element to rallying this morning. It wasn't that gapping up would ensure rallying, but that was a necessary element to that template. All right. long way to go. I hope not. That just to point out, we don't have that assurance any longer of rallying this morning. The overnight rally that is indicating a gap up, which is a necessary component to trending up this morning. And when I say this morning, I'm referring to the morning bias window, the 10:15 to 11:30 window. That is a necessary component. So it's still on the table. Indicated to gap up, in fact, at a fresh high. Here's our ascending triangle that had stopped short of a breakout on Tuesday and therefore kept the door open to another corrective dip. It wasn't triggered as of Tuesday's close and therefore had potential just to come back and fill in here, etc. Well, that's done. Can't be done again, otherwise this is no longer an ascending triangle, but a triple top, planning on whatever duration detouring down. That seems to be off the table because a gap up is indicated, which is, if maintained to the smallest degree, will produce a higher close, a gap above all prior highs. That's a setup. Prior highs, call them 48, 49. Gapping up above all prior highs will require being filled from below. If there were an immediate reaction down or the morning were spent higher or trending higher, at some point reversing back into this triangle will then require at some point retracing to fill the gap up. Right now we're indicated 53.59. It's way premature to rely on that. Let's say we gap up 53.60 and trend up this morning or reverse down immediately or trend up for a few days, however long it takes. If ever price were to return back into prior sessions range, this gap up would become unfinished business above, requiring it to be filled from below eventually. That's from some point, at some time. Until that were to develop, we'd basically be protected from a bear market beginning. It's a little thing. It's the little things that count, like that. So that sounds pretty bullish for the near term because it gives the upside, it gives the rally some entrenchment. It knows at that point that it can reverse, be required to recover. This is how healthy rallies maintain themselves, is they take advantage of those opportunities to refuel, to retrace, to isolate, or to trap shorts because they're not going to gain traction for their effort. Not when the shorts selling back into the prior range are just going to create some upside attraction, filling the gap back to the open. So we've lost our intraday 32, 42 attractions above to help resume or refuel at least, but resume upside momentum today. All these weak-handed sellers from yesterday afternoon have been proved out. If they're not already covering overnight, they're going to be applying upside pressure at the open. Doesn't mean they're going to control the open, but they are going to be a force to reckon with. But that's it. So, and we've got the rally being able to rest on its laurels with a gap up, entrenching the upside, already having proved yesterday, well, Tuesday, that it can come right up to the brink of a breakout and still take the opportunity to refuel. So if that's a pattern, which is kind of what we do here, then that opens the door to a morning of backing and filling. Morning or longer, but the initial play being back testing, reversing back into the prior range. Unless maintained through the first 15 minutes. We'll give the upside every benefit of the doubt if the open were to exit the first 15 minutes were exited above overnight highs. Right now, overnight highs are 53.63. If something else were to print prior to that, that would be the new overnight high. Exit the first 15 minutes above the overnight high. That would go a long way to suggesting this morning intends to extend even higher. That'll be our bias. And then we'll identify relevant levels at 9:15, meet back here. What would indicate whatever the pre-open high was at that point, that's extending, and what would be the rejection, which by then, depending on what the rejection includes, what it touches, if it touches the bias up target first, and by 10:15 has retraced the bias up signal, we've got another significant refueling about to develop. If bias up target is being met but not exceeded, we'll probably back and fill down to 53.43's bias up signal, maybe overlap it a little. But if the rally can persist, if it's going to break higher, we've got this in the entirety of this pent-up buying pressure. Taking the second widest swing, remember being a ascending triangle, this is one test, one confirmation to its pattern is that its second widest swing retraced 61.8%. Just classical in my work. Taking that second widest swing, this will be ballpark. Still have a couple of price points to fill in, but among the clusters of projections, we're already coming into 64, 63, 64 resistance. Next higher traction would be 74, then 90. And we'll be able to determine how these figure into the pattern when we see the open in the first 15 minutes. But there's plenty of upside projection from this pattern. All right, so meet back here at 9:15. And we'll see which way the market intends to trade this morning. On other markets, any questions about any of that, by the way? Other markets, the yen continuing along its path. Now having broken under what was the initial target after the interventions, having bounced to its initial retracement, that had it closed any higher would have, this is last week, would have done the unthinkable, the historical impossibility of proving the interventions to be correct. They just rarely ever are throughout history. So now, as of now, we've retraced back to what was the minimum projection, and a second consecutive lower close under that interim low, last week's low, would confirm that this has been a bear flag continuation and we're headed to fresh lows. So that is the yen. The euro bouncing off the lower end of this flag, bull flag continuation. The Aussie, not quite a flag, not quite a double top, but nice pullback into lower prior highs, bouncing. Shouldn't be any delay in its performance as well. Pound, no longer leadership necessarily. So silver had a likely pullback target coming into yesterday that it fulfilled. That was at 30.94, at least into the 30.94, 31.29 area. Fulfilled it yesterday, big pivotal point. But it is, of course, resolving down so far to 30.36 overnight. such huge moves here. Not a big dent in the chart, but I am looking for at least, there's one pivotal point here at the proxy gap. This is the proxy for the gap back to the actual close, the week-old actual close. The proxy is the 61.8 retracement between it and the open that created the gap. And the saying that all gaps are filled, back to the closes, not necessarily, but to their, at least to their proxies, yes. And so here's an opportunity that is in play, unless today's 75 cent or even more so break lower were to somehow recover into positive territory through the close. We're heading to 30.18, call it, for the next decision point. Gold off sharply as well. These two shallow pullbacks to TOO and TWO, shallow pullbacks, are coming back to haunt it as it comes into lower prior highs and uptrending support. Long bond, which had stopped at its 116.24 pullback target that it was met to within a tick and only firmed, actually did hit yesterday its low at the 116.24 pullback target and firmed. It's critical that today, at the latest tomorrow, close above their interim highs, above 117.20. Close above 117.20, and we'll leave any potential for an extra pullback, leave that behind. 117.20's close, or closing above, of course confirmed on a second consecutive higher close tomorrow, would take us back to prior highs. Just to remind, this bottom fully anticipated, fully developed, fully recovered. Momentum is up. Multiple legs, etc., back to highs. That's the premise. We're just haggling over timing. And then crude oil continues to chip away at its sell signal. Multiple consecutive sessions being greeted overnight with dips, being rescued intraday without having to actually trigger on a closing basis the sell signal under 78.95. Unfinished business below, we were talking at the beginning about ES gapping up above all prior highs because gaps beyond all prior extremes require being filled. That is, gap opens. This was unfinished business outstanding now on crude, 77.28. That's giving us the confidence to know that this bounce is very likely temporary. And Bitcoin's still dancing around here. There we go. Bitcoin's still dancing around here at its pullback limit, 69,000 handle. Actually thoroughly testing it now. There's a slightly lower low. The delay in recovering from 69,000's pullback already delayed long enough as of yesterday, 24 hours ago when we were describing this, that there was potential, not necessarily all the way down to 68.5, 68.4, but potential for a false break. This, the delay being that it wasn't attracting stronger-handed buyers to resume the rally, so it would need to discount a little bit, make it attractive. This particular pattern doesn't need a particularly deep false break or break lower, big discount to attract substantial enough buying pressure to resume its rally. But it did have room down to 68.6, 68.5, 68.4. It hasn't done it. It does have a extremely shallow, possibly fulfilling the break lower, extremely shallow dip down to about 69, piercing it slightly, reacting to it. The trouble with round numbers is we can never be too assured that that's going to satisfy. But coming out the other end, back above 70, 70,500, 70,600, I would expect that to resume the rally. I would also expect that to be at a very aggressive pace. If in fact this little very small false break has served the purpose of attracting stronger handed buyers here that weren't attracted here, then the reaction should be very aggressive, very widely, universally recognized very quickly, and start resuming, basically duplicating Monday's huge rally. If not, if a bounce were to start probing above 70,000x, attacking 71, and it still isn't very obviously aggressive, then that would be a concern that a deeper pullback may become necessary. Ethereum had already started firming yesterday, and now it has continued to fresh highs, continuing to serve as leadership. Remember, this surge, although it came right into its target and peaked right at its target, was never going to suffice as an ultimate target because it was a singular surge out of this pattern, and this pattern is not going to develop one leg. Solana taking a big detour. So long as it's testing 173, 175, so long as it's overlapping it, it's only testing it. But this is the pullback limit. And now this pattern, the rally is dependent on this becoming, becoming basically a bull flag continuation. And if that's the case, then its parallel downtrending support is basically intersecting right here, right now. So is a prior low. Not quite the prior low. Don't touch the prior low. A bounce off of 166 would be obligatory and temporary. React up, back above. You can see these higher prior lows. The support that has broken lower, that's about 177. The all clear should be above 177. We don't need to actually leave the flag behind, but 177 is significant resistance, and 177's recovery aggressively should be the all clear that this consolidation has ended and that the rally has resumed. That is Solana. All right, again, any questions, please ask. Meanwhile, meet back here at 9:15. Good luck today. And by the way, if you're late joining us in the YouTube simulcast, I'll go ahead and post that link to the strategy session that we just held. Paid members are able to join us every morning in real time. if they have a vidiROOM upgrade added to their account. And the recording is available to everyone. But here's its recording if you check the chat. There it is, immediately available. Members also are going to get a post, a blog post, with what we just discussed in a narrative form. It's actually, the creation of that post actually follows a pattern that I use as a teaching device, a learning device. It basically transmits the information in a way that, in a format that helps to helps you to see what I see. What am I looking at first? What am I filtering out as far as what's relevant about what we're looking at on screen? What are the important points about it? What kind of forms, what kind of setups, what kind of patterns is it developing and or triggering? And then lastly, what's the actionable? What do we take away from it that we can apply? What triggers, what targets, etc., and what strategies to apply? Where do we know we're wrong? What are the relevant levels? A summary of that. So that's the blog post. You won't have that if you're just in the simulcast, but as a paid member you would. And I'll be dropping a link in shortly. I tell you what, I really appreciate the response from yesterday. Here is the link to yesterday's sign up. Again, if you take advantage of this before before we finish today, at noon. Yesterday I extended into the afternoon because there hadn't been anything really significant to see. And promotional message here, that's really why I'm doing this, is to gain subscribers, which I do through giving you a free look at what the methodology, what the teaching setups can impart upon you, and whether through learning or profitability. So we kept it open for the afternoon, and this afternoon, though, will not be open. Whatever happens this morning, anyway, I think we're going to get enough activity, so you'll be able to make a decision whether you want to stick around for a few weeks. But the point being that use this link that I just dropped in the chat, and if you can do that before noon today, normally somebody who signs up gets the vidiROOM upgrade, which is $200 every term, gets that for free on the first term. If you take advantage of this link, you can have that upgrade for 3 terms. So $600 savings right there. Plus, in the third term, if you use this link by noon, in the third term, you'll get a complete refund on that month. It's every 4 weeks. The third renewal is entirely free, the third term. But again, you have to take advantage of that link by noon. I'll repeat that later, but meanwhile, there's the recording if you missed the strategy session. And if you have any questions about any of this, it's an ongoing story. That's why the beginning of the strategy session really references relevant points from yesterday, because the market's telling us an ongoing story. It's creating objectives, it's fulfilling objectives, sometimes it's leaving them outstanding. There's bias parameters to learn about. They're influential. They give us a lot of our information. But again, take advantage of the free access. Post any questions, any comments as they occur to you, and I will get to them as possible. And above all, thanks for taking time out of your day to try the service. the premise. We're just haggling. Is anyone having difficulty with the link that was emailed out? Not the one that I posted in the chat, but the one that was in the email? All right, welcome back. So as we greet the open, there's been a fresh high. Retest of 53.64. We demonstrated during the strategy planner that 53.64 is the minimum target above the multi-session ascending triangle. Minimum. And being resistance, basically, that's what a target does, is it satisfies buying pressure to a degree. It's the first opportunity for a reaction back down into or to the triangle's resistance, to its what was resistance, its lower prior highs now in the 40s. Let's get this. Here we go. So, gapping up, by the way, the overnight rally has formed complexity that qualifies as a Globex trend extreme. It'll require being retested intraday at some point. The open above all prior highs will require being filled from below. There's all this stuff that is bullish, but which lets the rally rest on its laurels and refuel with a dip. It might improve its lie instead. First thing this morning, we'll know which way pretty much from the first 15 minutes, whether it's able to lapse above the overnight high, which is getting more and more difficult here. So, back above 64, I'm going to give the upside more benefit of the doubt that it is intending to resume. Let's see how deep this gets. If we get any deeper, I'll be able to lower that buy signal. Actually, right now, not that it's a big deal, 63.75 is the actual inflection. I would view it as immediately actionable. Usually an immediately actionable setup upon first contact will be immediately productive. In other words, by several points. Whether or not those are maintained or immediately retraced as a correction. So, having pulled back, it has that opportunity. As far as further downside, I don't think this just plummets through the open, even if its intent is to reverse down ultimately. But we do want to see the first 4 minutes of probing any inflection. We do want to see that itself probed deeper than its first 4 minutes before actually confirming momentum reversing down. But that level right now is 53.58. Under 53.58, and we'll see where the opening print is. I might be adjusting either of these, but under 53.58 would start to suggest, especially if maintained, especially if extended through its first 4 minutes low, that momentum has reversed down for whatever purpose. Any questions, let me know. I'll be right back. So, if you're in the YouTube simulcast room, this recording that I'm dropping in the chat, this is a quick recording of the opening tactics, the pre-open tactics call that we just did. And that's basically what we do for 2-3 minutes is review where are we greeting the open. Now this is a little more fluid. It's turning out to be a little bit more fluid as we are still 10 minutes out from the open. So I don't know what the opening print is going to be, and that may adjust the actual parameters. But right now, or as of the opening tactics call, these are the relevant levels, the actionable levels perhaps. I mean, action can be taken whenever you pull the trigger, but as far as anything to gauge against, these are the levels that need to be exceeded to indicate follow through in that direction. Now there's also some tactics that we use. So for instance, I have a relevant level. If you look over here at this sidebar, the sidebar to the left of the chart, this 3x3 test, what is that? 3x3, 4x4 during the first hour, but 3x3. 3 ticks, 3 minutes. 4 ticks, 4 minutes during the first hour. So my inflection points, these little brief lines, blue lines, those are inflection points. They're resistance and support, and they're otherwise irrelevant, but as soon as it's probed, as soon as one is probed by at least 4 ticks during the first hour, 3 ticks any other time of day, a countdown begins. A countdown, 3 or 4 minute countdown, and the question being then, I just want to make sure that we review, by the way, the 3x3, 4x4 during the first hour, but 3 ticks, 3 minutes, 4 ticks, 4 minutes. As soon as an inflection point is pierced by at least 3 or 4 ticks, the 3 or 4 minute countdown begins. Now we don't know if all 3 or 4 minutes will be spent probing beyond the inflection point. It doesn't matter. As soon as a bar has minimum 3 or 4 ticks during the first hour, 4 ticks, a 3 or 4 minute countdown begins, and it establishes, basically it takes the pulse or measures the energy and strength of those buyers or sellers that are creating that minimum 3 or 4 tick probe. Whatever that is, based on my inflection point, my calculation of the inflection point, whatever kind of noise they're able to generate, they have to exceed that. That has to be exceeded by reinforcements arriving, and that's what confirms the signal. Now that's not necessarily the actionable point, that's not necessarily where you decide to pull the trigger, but if you're pulling the trigger, you definitely want to see that extreme, that 3 or 4 minute extreme exceeded to know that reinforcements have arrived. Tactically, some traders are very aggressive and they'll place their stop, for instance, a sell stop right under the sell signal, 53.58. So 57.75. Some strategies might wait to see those 3 or 4 minutes develop or start to develop. They may not all be, they're usually not all spent probing that level, so they may counter trend, they may detour back up above the signal while testing it, while that 4 minute countdown is developing. So some subscribers or traders may decide to slow play it, to let that play out a little bit and kind of negotiate a more attractive, a more attractive entry price, if even attractive means better priced. Attractive may mean more reliable because that 3 or 4 minutes have elapsed and price is performing. It is actually following through on the sell signal in this case. So may pay up for it, but with that greater assurance that those 3 or 4 minutes have elapsed. Still no 100% assurance ever, of course, but just to know here's the counter trend detouring. If 53.58 were probed by a couple points, And during those 4 minutes, counter trend detouring allowed, bounced to 59. That would give an indication as to where a stop. You could base a stop off of that bounce. You wouldn't have that indication immediately upon first contact. So just more information. Sometimes you pay up for more information. So just as you do this, if you notice during the day, there's not only going to be blue lines that identify the initial inflection, whether or not that's actually used for immediate actionability or just to monitor its first test and negotiate a better entry price. You'll notice that these are support and resistance. That's why exceeding them beyond their first 3 or 4 minute probe should be that much more productive. It should be reinforcements arriving, etc. But they are at first support and resistance. So this sell signal is a sell signal because its break would be so powerful because it's a break of support. Support, meanwhile, can offer a bottom. We haven't yet pierced it intraday. If you're taking action already, know that there is still going to be the requirement. We don't start the countdown until post-open intraday buyers and sellers are active. So this is not the work of intraday sellers. So when we get to the open, until we've seen a minimum 4 ticks probing the sell signal, which we still haven't even seen pre-open, well, here we go, then there is still that line in the sand, that threshold that needs to be reached or breached. Because of that, by the way, we're not at the open. This is a very fluid situation in the open. The opening tactics, when I identified these levels, was going off of price around 61. That has changed, so I'm going to adjust this, recalculate. But let me finish the point that this being support, it may actually hold. So depending on where we are in the scheme of things, we may do an audible, we may just be discussing different patterns that are, or different tactics that are available. Bottom line being, this may actually, the sell signal may be an opportunity to buy. I'm not really seeing much difference here. Yeah, we're opening with a lot of selling pressure already out. I think word is out. So I'm lowering the sell signal to 55.50 because it needs to be reflective. Let's at least leave this noted that it is a relevant level. But as far as the intraday, where am I going to start gauging the intraday crowd is under 55.50 to measure their strength of their convictions. And already we're greeting the open right there. So already we're right back, we're right down to 55.50, or we've gotten to 55.50, which is my next relevant level. and piercing it actually. So we've gotten rid of a lot of selling pressure pre-open. Really discounted this. My concerns during the strategy planner and opening tactics was the opportunity that the rally had or has to rest on its laurels, having become entrenched. That is, to refuel by shedding whatever kind of weak-handed sellers there might be. So back to the strategy talk, the 3x3 or 4x4, if your tactic is to place a sell stop in this instance, right under the inflection, obviously you're very happy. You might want to consider that even when this immediately actionable, when the sell signal, in this case, wasn't even supposed to be, or wasn't, and still isn't, any likelier to have been immediately actionable. It has been. But that wasn't a likelihood in this pattern. Now that it has been immediately productive, note that this is very aggressive. It's not last minute, it's first minute. This explosive behavior right at the open suggests that the retail crowd can't wait to get their orders in. What do we know about retail? That they are very often wrong. So they could be joining hands with stronger-handed pros, institutionals. So I don't want to sell them too short. But even then, even as productive as they are being in this case, it's tough to continue coaxing in sellers just because price is heading down. At some point, they get priced out. And the retracement back to the lower prior highs, the ascending triangles, lower prior highs. Largely complete. Let's get our pricing here. You know, yesterday's cash session close was actually 29.50. That's how much buying pressure has expended since yesterday's, post-close, literally on the heels, well, in reaction to and on the heels of NVIDIA. I think we're coming right into it. I'm going to call it 43. This is the 61.8% retracement between today's open and yesterday's cash session close. This is the 61.8% representation of that, a proxy, in other words. This is the 61.8 of the 61.8 at 42.75. So that's an objective, and just overlapping the counterpart, the 38.2 counterpart, is supportive. That is 46.75. So right now off of 46, my bounce limit is 50. Just another form of inflection. I'm getting prepared. I'm trying to find a place to buy this. It's certainly possible that all this intends to do is just plummet right back down to and through yesterday's lows. That is a template. It's not the likeliest template. but it is a template. So we do need to see a little bit more information on this, though. But there's the bounce limit. Once the bounce limit is probed, we start another countdown. 3 or 4 minutes, minimum 3 or 4 ticks, 3 or 4 minutes. And I'll lower this along the way, certainly as we get to 43. Bounce limit is now 49. As soon as it's pierced by 4 ticks, I'll start a 4-minute countdown. Whatever the high is of that will inform me how aggressively I can lower the buy signal. Can't be doing both. A sell signal can't be testing its bounce limit, and with the same bars triggering a buy signal. It's not just bad form, but that's actually a discipline that keeps us disciplined not to chase knife catches that aren't going to amount to anything. Rarely do they. All right, give us a minute. I'll be right back. So I've got lines in the sand here. The 38.2 counterpart to the 61.8% proxy of the gap, the actual gap back to yesterday's close. The counterpart, you can see how price slowed down there, but it didn't stop it. Even elephant tranquilizer takes a little bit of time. And meanwhile, the stampede continues. This is just an interim, kind of a proxy for the proxy. 61.8% retracement of the 61.8% retracements range. We've actually come into it here. Pretty much at a 50%. Bounce limit is now 47.50. All right, so we spent a lot of time during the strategy planner talking about why the overnight rally, even though that was a necessary component, a gap up, necessary component to any kind of a morning rally, that at least opened the door, but it didn't close the deal. That gapping up wasn't only able to rally, it had other options, and this was one of them. So good information, and it's now moot because it's already played out. So now we're focused on something else entirely different, or at least separate from that. Let's first point out the open. The opening print is 57.50. 57.50's opening print above all prior highs. Now that we've dipped back into prior session's range, 57.50, let's just call it let's just call it 58. 53.58 is unfinished business above. Now that we've dipped here, someday, maybe today, maybe this next hour, from some level, maybe here, maybe lower, we'll in our best expectations, fill this gap, the opens gap back up to 53.58. That is now unfinished business. Okay, there's the 61.8 proxy that is very natural support. It doesn't have to hold. In fact, when it's being met on simultaneously oversold 1 minute, 3 minute RSIs, it's likelier to extend back to the gap itself. The gap itself, yesterday's cash session close, is 29.50. If this doesn't hold, which it even on simultaneously oversold RSIs can hold temporarily, and there's one other exception I'll describe in a moment, but if this doesn't hold, it's because we're heading to 29.50. And 29.50, by the way, is a landmark. It doesn't satisfy selling pressure, so it doesn't necessarily bottom right there. It's just to identify, here's the next lower attraction. Whatever else in its area, it's going to be in the process of testing at the time. That's what's most relevant. 44 is now the bounce limit. Still haven't pierced one. That's how relentless the selling pressure has been. So there's the 61.8, kind of there. That was the 61.8 of the 61.8, in other words, the internal measurement. I'm looking at that 53.42.75 for a couple things. One is it actually being broken or is it still being overlapped? Because it can be overlapped and not broken. This looks like it's breaking, but actually the bars are still overlapping it, so it's not actually breaking. So that's my preliminary indication as we come into the actual 53.40.25 proxy for the gap back to yesterday's cash session close. If this is going to continue, and if it just doesn't spend much time bouncing before continuing, RSIs are going to be simultaneously oversold when the 61.8 proxy gap is broken, and that's going to tell us we're heading to 29.50. Otherwise, if the proxy gap intends to hold, we can do the math in our heads, because it's not really math, it's more guesstimation. If this drop intends to hold this area, instead of returning to the gap, the actual gap, back to yesterday's cash session close at 29, then the challenge is to take at least one of the RSIs, 1 minute or 3 minute, out of oversold territory. In other words, bounce, so that older data drop off in the RSI calculation and they would get replaced by newer data, so that the RSI can leave oversold territory, and then retest this low, or at least bounce from here, so that the 61.8 proxy gap is not met with RSIs simultaneously oversold, because that would next target the gap itself. So if I'm looking for a low, or if I'm monitoring for a low, as we should always be monitoring for any kind of reversal possibility or attempt, that's going to be the threshold right now. Is a bounce going to develop? Developing a bounce doesn't necessarily mean that this is going to bottom, but it is a necessary first step to prevent RSIs from being oversold if and when 53.40 is actually met. Kind of like the gap up. If we were going to rally this morning, it had to begin by gapping up. It just wasn't going to begin by opening flat or lower. But gapping up wasn't ensuring a rally. It would just open the door to that template. Another template allows a gap up to do exactly this. And for certain reasons, we focused on that quite a bit. Well, now that's done. Are we going to settle for the proxy gap, or actually fill the gap? All right, there's the actual test of the proxy gap. RSI's 1 minute not, but 3 minute is persistently oversold. 1 minute actually greeted. It was able to get out of oversold territory. There's a chance here that this holds. There's a pretty good chance this holds. The bounce limit is probed by at least 4 ticks. We can consider that, and we can assume that might be the 4-minute high. It's premature to do that because it could be probed even higher during those 4 minutes and then rejected. But if that's the 4-minute high, let's just assume the 4-minute high. All 4 minutes don't have to be spent probing above the bounce limit. All 4 minutes don't have to be spent. 3 minutes any other time of day, 4 ticks, 4 minutes during the first hour. The clock is counting down. We're in the 2nd minute, about to start the 3rd. If this is the high at 46, 1 or 2 point buffer, room for noise. Anything higher, that's how aggressively I'll be able to lower the buy signal. Because we basically just filled the gap. The proxy for the gap. And if the proxy doesn't hold, then we're going to extend down to the gap itself, presumably. But if not, then this is very often going to be a bottom. It's interesting that the bias up signal, this is the bias up signal, bias up target, that the bias up signal is also engaging. It's calculable from price action through yesterday's close. The bias up parameters, the bias down parameters, signal and target, signal and target. They are calculable from price action from patterns that had developed as of yesterday's close. They're support and resistance. They're otherwise not predictive. What makes them predictive is at 10:15. At 10:15, if the either signal, not the targets, the outside levels, but the inside green and red lines, if either signal is touched between 9:30 and 10:15, then it either triggers or it doesn't. So if the bias up signal holds its support, if at 10:15 the bias up signal has been recovered, not still being overlapped, but actually recovered, that'll put into play a test of its target, the bias up target. Now, even if the bias up target has been met already post-open, it'll still be put into play. If the bias up signal is recovered as of 10:15, that would put into play the target at 58. A lot can happen between now and 10:15, but that's when the bias up signal can be predictive. It's otherwise supportive, but it's actual predictive behavior. What does it mean to have recovered or rejected it? What's the window, 10:15, for the bias? But here's the interesting thing, or things. First of all, the bias up signal, if the bias up signal doesn't trigger, having been met, we could have opened down here and never touched the bias up signal at 10:15. But if the bias up signal is not triggered, having tested it post-open, that puts into play an offsetting test to the bias down. So it's a no bias, but actually reverse bias, because all these buyers, they didn't have to be so impatient as to test the bias up signal. But if they're going to test it, they better be strong-handed enough to maintain the test. Otherwise, the consequence is an offsetting test to the bias down. Bounce limit is 38. Bounce limit just forced us to be disciplined, not to chase a bounce, because it has to be probed by 4 minutes just to establish where the buy signal can be lowered to. Because momentum's not reversing up usually otherwise. In fact, those 4 minutes didn't even fully develop before probing lower, and now low enough that a new bounce limit is calculable. And by the way, while I'm talking, 1 minute RSI has slipped back into oversold territory. It didn't have to be simultaneously oversold with 3 minute RSI, but upon finally probing, it was. They were both oversold, and so the assumption is that we're heading to 29.50. Thereabouts. Ongoing series of lower lows and lower highs. Lower lows and lower highs, that's a trend. We have multiple lower lows and lower highs now. That is just an observation to make to maintain our own discipline, just as a bounce limit would. I would never expect downtrending that is intact, that is to say no bouncing above a prior high yet. Look how far we'd have to bounce just to attack that prior high. I'm sorry, did the chart disappear? If you're unable to view the chart, try logging out and rejoining. Look at this downtrend just persist. So even if this were to produce a bounce from the downtrend, we would expect it to fail by virtue of its origin being a downtrend. All right, there's 29.50, so that is that's done. The predictability is done. That doesn't mean this is a precise low, and usually it's not. It's just a landmark, an attraction. Bounce limit is 31. So I was describing, by the way, bear with me one moment. Let me just rehash. The bias signal, we may be dealing with something else entirely by the time we get there, but the bias up signal doesn't look like it's going to trigger bias up. It doesn't look like it's going to be recovered by 10:15. Of course, we were equidistant previously in this time frame above it and managed to break back below it and then some. So never say never. But if bias up doesn't trigger at 10:15, if it hasn't been recovered, it puts into play an offsetting test of the bias down signal. And by the way, having also tested, or if the bias up target has been tested too, the bias up target being 58, that was in fact the open. That's how relevant of a level that was. And the bounce limit is now 30. And the bounce limit is now 29.50. So, how's that screen? Let me know if there's still an issue. Okay, great. So, having tested the bias up, if it doesn't trigger, it puts into play, as of 10:15, it puts into play an offsetting test of the bias down signal. Having tested both bias up parameters, if bias up doesn't trigger at 10:15, it puts into play offsetting tests of both bias down parameters. I call that a synthetic bias down, because without even touching the bias down signal, let alone triggering it, rejecting tests of both bias up signal or parameters puts into play offsetting tests of both bias down parameters, including the bias down target. So it's like triggering bias down without actually touching bias down. So now let's go even further. Look at where we are with 20 minutes to go before 10:15. Bias up is the least of this market's interests. Right now, it's threatening to at least touch the bias down signal, maybe even trigger it. It may be a legitimate or cleanly triggered bias down, putting into play the bias down target. Or one other possibility here, and just to point out, the bounce limit is now 26.50. One other possibility here as we come to the bias down signal, which is going to be put into play. A test of it will be required if the bias up signal isn't recovered in 20 minutes. It's certainly possible all of this selling pressure having been expended so aggressively, so substantially, and so quickly will have priced out further sellers. Rather than attracting more sellers, it becomes a buying opportunity. It becomes attractively priced. 22 is still a couple points short of touching the bias down signal, but just as the bias up signal had an opportunity to recover and trigger bias up, and now the bias down signal has an opportunity to break through 10:15 and trigger bias down, just as the bias up signal had a chance to, or is on the verge of holding its test, putting into play an offsetting test to the bias down signal, a test of the bias down signal by 10:15 that recovers would put into play an offsetting test to the bias up signal. So it's not just a matter of knowing the levels, it's a matter of knowing the time. What time does it matter that it was tested and how that test was resolved? Of course, it's possible at 10:15 that the signal is being overlapped. In fact, if the signal is still being overlapped within 3 minutes either way of 10:15, everything I just described about 10:15 is shifted to 10:30. So there's a 15-minute grace period invoked if the bias signal, either bias signal, were still being overlapped within 3 minutes either way of 10:15. But if this is what it looks like at 10:15 and 3 minutes either way, having tested the bias up signal, not yet testing the bias down signal, a test of the bias down signal would be in play. And by the way, having tested both bias up parameters, so would a test of the bias down target be in play. 1 minute out from top of the hour. We do have an economic report coming at 10, and it is not high profile or reliably influential to price action. But it may very well be inhibiting prices before price action. Nice little flag perhaps forming. So let's inspect this pretty closely. There's the bounce limit at 26.50. I'm sorry, 26.50 should be, so let's get that adjusted here. Bounce limit at 26.50. Errant ticks, but bounces to 27.25, not even 4 ticks. So we haven't even begun the countdown on probing the bounce limit for 4 minutes. So we don't even know how aggressively the buy signal could be lowered. But once we know where the 4-minute high is, the usual attention span of weak-handed counter trend sponsorship, once we know where their attention span lapses, which is, by the way, the patience of strong-handed sponsorship too, letting them have their way here. Once we know that 4-minute high is, we'll lower the buy signal as aggressively as possible. I mean, we didn't touch the bias down signal, but there's support in this area. If you are short, you have a stop that's based on your risk tolerance, and should be a resting stop. So if it's already past your risk tolerance, it should have already triggered. And even if you're still short, whatever it is, I'm looking for a 4-minute high so I can have a idea where this usual attention span of weak-handed counter trend sponsorship has gotten us to. As aggressively as this is, as aggressively as this has bounced, a lot of support in here. So obligatory support, certainly an explanation or excuse for the bounce, but nothing is necessarily an excuse for such a big bounce. Yeah, there's news that just hit. That helps. The first 60, 90 seconds following a headline is a knee-jerk reaction, weak-handed knee-jerk reaction. I'm not going to take cues from that. But if at the end of 4 minutes, or as those 4 minutes starts to elapse, if we're sitting at the upper end of the usual attention span of weak-handed counter trend sponsorship, it's going to be a very attractive short. And not just because, or not necessarily because it's any likelier to resolve down, but because it'll be so close to where we'll know it's wrong to be short. By the time the 4 minutes elapse on this bounce, like the last bounce here, this may have already dropped. It may not ever drop again, but it may have already dropped back all the way. All I know is the countdown of what constitutes the usual attention span of weak-handed counter trend sponsorship. That clock is still ticking. We could bounce from here again. Now, it doesn't look like when 4 minutes have elapsed, it doesn't look like we're going to be sitting at the upper end of this 4-minute range. That doesn't mean I can't throw out a limit sell in case we do get back here. Again, doesn't make it any likelier to be profitable, doesn't make it any likelier to hold and or reverse down. But it is so much closer to where I'll know it's wrong to be short. Because this 4-minute high plus 1 or 2 point buffer room for noise. Right now the 4-minute high is 33, 1 or 2 point buffer room for noise up to 35. I'll need to run the numbers. That may actually be where I'll put my buy signal. But that's also a stop. So if I can get off a short on a retest up here, my loss can be limited. I can place a stop just above 34, 50, 35. That's what we have control over. All right, I am going to come down here to 35.50. I don't want to get too aggressive because there's too much likelihood of resolving down. I don't want to get whipsawed out unnecessarily. And there's also so much potential upside here if and when this does decide to reverse or does decide just to hold. So again, that 3 or 4 minute countdown on testing a bounce limit, once it's pierced by 3 or 4 ticks, starting the 3 or 4 minute countdown, that is the usual attention span of weak-handed counter trend sponsorship. Usually, more often than not, reliably, Whatever the adjective is, it always applies to past tense. Past performance is no guarantee of future performance. The past performance of these weak-handed counter or these counter trend buyers, usually they're going to fail wherever their 4-minute high is. Well, they already have failed, so I would still be willing to try to sell a retest of this high. It's a little less attractive because these weak-handed sellers have already been have already suffered the consequence. Said another way, the sellers that absorb them have already been pretty well rewarded. So it's not as attractive, but that doesn't change the math. The math on the risk side of the equation, the risk-reward equation, I still know that I don't want to be short above 35. Right now, if I sell this at 28, that's a 7-point stop. If I've got a 1-to-3 risk-to-reward ratio, that is my trading plan, and those are the only trades I'm going to take if I've got a 1-to-3 risk-to-reward. Now I can get 29 with a 35 stop. If I have a 6-point stop and I want 3 times that potential reward, no assurance it'll ever come, but does the pattern tell me I'm going to get that? It kind of does. Because at 10:15, let's go ahead and assume we're going to have rejected tests of both bias up parameters, putting into play offsetting tests of both bias down parameters. And that includes 5303, which is 26 points away. I just needed 18 points to make my 1-to-3 risk to reward ratio. Having said that, I don't want a position with a 7-point stop. So that's another part of my trading plan, is that my stop has to be X points. In a mature trade, call it 3 to 4 points. Initiating a trade, call it 1.5 to 2 points. Can always re-enter. Get whipsawed out once or twice, re-enter. But when it's mature and established and already creating lower attractions or further attractions, I'm willing to give it a little bit more room. But 7 points, I just don't want to be sitting on that. That does too much psychological damage. So I definitely want to get in where I'm as close as possible to where I'll know it's wrong to have that position. That's actually more important than direction. Many times the math will make sense even though it's contrary to the signal. And yet still identifies before the signal does that there's a counter trend move. If you have any questions about these items that I'm covering, let me know. These are very important. So here's the 3x3 test or 4x4 during the first hour. Here's another helpful sidebar, risk reward, which basically covers or is an overview of what we just covered the math on. What's our risk? What's our potential reward? How do we know or determine where to take action and manage that? And if you look in the top left corner of the display, you see a little button up there. It says references. If you just click on that right now, it'll open up a web page that has these sidebars and more. So they're always right in front of you when you need them. All right, so it was a little iffy. I don't care what the bias parameters say. If you picture a plane coming in for landing, it doesn't just, this being the landing strip, the plane descending out of the clouds doesn't just hit the ground and land. It starts to level out. So if we know we've got an objective down here, minimum objective at 5320, starting to level out there makes sense. But now we're testing an inflection. This is a buy signal. It's an inflection point. What does an inflection point have to do? It has to be pierced by at least 4 ticks during the first hour. Well, there's 4 ticks. Now we can start the countdown on 4 minutes. We're still in the first hour. And when it's exceeded those 4 minutes, minimum 4 minute, or 4 tick, 4 minute high, all 4 minutes don't have to have been spent probing this signal. We could suddenly see a down bar as part of those 4 minutes. But once we know where the 4 minute high is, we'll know what constitutes reinforcements and what means that this is extended, that this has extended. They're not all, and in fact, they're rarely going to be so immediately productive as the sell signals were. Often they're going to perform more like this. They're going to perform more like these inflection points. These inflections are the same as this inflection and that inflection. They just happen to be colored differently because they have a different utility. This is a signal, a buy or sell signal. This is a bounce limit or reaction limit. Often they're going to behave more like this, more like this, more like this. Unfortunately, not often enough like this. So a trader whose strategy is to monitor for that 4 minute extreme and negotiate entry, and maybe within a few minutes to have seen enough probe to know this isn't just being tested as resistance, and a reaction down to see that volatility, may decide, okay, the next bounce, I'm going to buy it back above the signal, or I'm going to wait for that 4 minute high to be exceeded. Or once that 4 minute high is established, I'll assess that and buy maybe the lower end of that range. This level is just intended to identify where the relevant price action is. This is relevant price action. This is relevant price action. So if your strategy is to set a buy stop, just as a sell stop here would have been immediately productive. If you've got a buy stop, if you're still implementing that same tactic, your buy stop is triggered. Where's your stop? Where's your sell stop on that? Your protective stop? I mean, the inflection hasn't yet established how much room it has by detouring 4 minutes. So you've got to use your own risk tolerance to guide that. And maybe your risk tolerance said don't even get in yet till you know what you're dealing with. If your tactic or strategy is to monitor for that 4 minute extreme, then you missed this trade altogether. You could have considered could have considered an entry on the bounce limit test, but again, the same 4 minute tactic would have missed that altogether. You could have bought this bounce. There's a retest of its high right here. But that's why you want to have your volume up, because as I was saying, this is pretty extended. We're coming into the low. It wasn't not viable. It was, if your strategy is to take these, you have to take it. If you're looking for that plus a 1 or 2 point buffer, room for noise, well, we're already there. Can always re-enter short. Now that we're testing a buy signal, I can't identify a sell signal because you can't trigger a sell signal with the same bars that are testing the buy signal. So we have to identify the 4 minutes of detouring, counter trend detouring, and then I can identify where the sell signal would be that reinstates the momentum. Because this may just be testing resistance pretty aggressively. Well, it's that kind of session. That's not going to change where the inflection point is. And now that the 4 minute high is being exceeded, I can get aggressive on a sell signal. Kinda. Right now my sell signal is under 30.50. Under 30.50 will have already violated the counter trend detouring around this buy signal. Right now we're in the process of testing this buy signal. Thanks to an errant tick or two here, we just pierced the 4 minute high. Not a high degree of confidence in that signal until it's actually trending away, which it has yet to do. All these bars are overlapping the signal. But in overlapping it, they established an extreme that can't be broken, and it just broke. And now we know back under 30.50, I'm going to give sellers every benefit of the doubt. Or at least that's going to be the start of trying to resume the decline. So previously, a sell signal was disqualified from triggering. But now that the 4 minute extreme counter trend detouring has been established, at least 4 minutes after first probing the buy signal, and a 1 or 2 point buffer, room for noise, is being probed, I know where I can put my sell signal, where I can be confident or start to be confident that these buyers, actually that's all they could do. Maybe I would have sold this test of resistance. That's what a buy signal is. It's resistance. Until it's exceeded by stronger hands that establish and then attract reinforcements above a 4 minute high. They didn't do that. These buyers overlapped, never exceeded the 4 minute high without overlapping. And by the way, there was a target outstanding, 53.20. We know we're heading there. Maybe even to 53.03, because we rejected tests of both bias up parameters by 10.15. So I'm giving this sell signal. If this sell signal is pierced, I'll start giving it every benefit of the doubt. Whether or not to wait for the 4 minute extreme to be established is everyone's individual decision. Let me get this in the right spot. But there's 30.50 being overlapped. Overlap by what? 2 ticks? So we don't even start the countdown on testing that as a sell signal. But we're no longer testing the buy signal. We know that. It can be reinstated. It can be probed again. I leave that marked because I want to know that the market engaged with a signal or with a bounce limit. I need, for my purposes, to be able to glance at this chart and immediately see those reference points. Now this legend is available on the site, on the chat sign-in page. A lot of stuff. Such a fast-moving market. Not really able to mention everything that I want to mention, but I focus on what is developing at the time. What speaks to the trade that the market has given us. So my focus right now is on this sell signal. But if you have questions about anything, post it. I'll get to it. I'll work it in as I see fit for priority, etc. If you're in a position and you need to know an answer to something, definitely let me know that. If something is dependent on that. All right, the bounce limit is now 28. We were never even probed the buy signal, but overlapping it, never buy enough to be able to calculate a new bounce limit or pullback limit. Already this one is. So that counter trend detouring I was describing for the buy signal, that's irrelevant now for this sell signal because it's already been exceeded by so much that a bounce limit is identified. The bounce limit is now the reference point for counter trend detouring. The usual attention span of weak-handed counter trend sponsorship starts when it pierces a bounce limit or any inflection point by at least 3 or 4 ticks. It's just human nature of a herd mentality. Not only are, for instance, right here, not only is this weak-handed buyers in their first 4 minutes, it's also the patience of strong-handed sellers. They're letting them do that. It's an unindicted conspiracy. They are all in on it. They don't realize it, but their own subconscious on a mass scale is allowing me to, by identifying the correct anchor points and applying Fibonacci appropriately, being able to find what levels indicate when they start behaving in a certain way. Counter trend, weak-handed sponsorship, reinforcements, strong-handed. And then we develop a trading strategy around that. And you bring in your risk tolerance and comfort level and personalize it to yourself. So it is, by the way, as of 10:15, it is bias down. As of 10:15, it is official. This is a bias down. I'm sorry, not a bias. What am I saying? No bias. Thank you. But actually, it's a reverse bias. So it's not just a... let me build it up. It's not just no bias. And what I meant to say is the bias down signal is in play. So as of 10:15, it's clean, by the way. 3 minutes either way of 10:15, there's no bias signal being touched. Bias signal, not bias target. There's no bias signal being touched. So it is no bias. But let's look back and notice that in this no bias, the bias up signal has been tested since the open and rejected. So an offsetting test of the bias down is in play. That's a reverse bias. Let's look further back. The bias up target was also touched, not just overnight, but post-open. That's what matters to this. It's definitely resistance. It's definitely a reference point. But what matters is, was it actually touched post-open? And it was. It was actually the opening print at 58. So on the way to rejecting the bias up signal, the bias up target was met and therefore rejected as well. So the consequences to buyers for having been so impatient as to probe the bias up signal but not being able to maintain it through 1015, and the reward to sellers, that is, for absorbing them, is the reverse bias, the bias down signals test. But because both bias up parameters were rejected, the reward to sellers is a test of both bias down parameters. So without even touching the bias down signal, the bias down target's in play. And that's why I call that a synthetic bias down. So treating it like a bias down, even though it hasn't touched the bias down signal, the minimum requirement is to actually touch the bias down signal. Until we get a fresh low since 1015, it won't be required to go on to the bias down target. It usually does anyway. But once we get a fresh low, we've signaled a clean synthetic bias down. Once we get a fresh low during this bias window, that's like confirmation. And that will require also the bias down targets test. So as you can imagine, I'm not going to be very bullish until one or both of those is met. But also, I'll entertain a bounce if conditions merit. If it's left outstanding past this morning, if one or both of these is left outstanding past this morning, I'll still be looking at that as context. It doesn't preclude bounces or buy signals from being entertained because they can be productive. We already know there's unfinished business above. The gap up at 53.58, ever since dipping back to a prior session, has yet to be tested, has yet to be filled from below. But we know it will be, or that's our premise. That doesn't preclude us from taking a sell, from anticipating much lower lows in the interim. So we're still waiting for this to play out. When the bias window lapses, if this hasn't played out, we may start focusing more on the upside. I can, spoiler alert, I can tell you I'm not going to be focused on 53.58 until we get into its orbit, like back above the prior high that created it, etc. Let me point something else out. If you go in the blog or in your email, the email alerts that you get, this is the bias post. This was posted after yesterday's close because it's derived from patterns through yesterday's close, as of yesterday's close. And at that point, it's pending. The bias status is pending. We now know what it is, but as of that, it's pending. If at 10:15 price had been above 53.43, it would have put into play its target at 53.58. Under 53.20 would have put into play its target under 53.03. In the blog, or if you just click on AM bias rules, or in the email, it's already expanded. At 10:15, it's a synthetic bias if tests of both bias parameters were held. Which would target tests of both offsetting bias parameters. That's where we're at. In fact, as of 10:15, I can hit refresh. And this is updated to say synthetic bias down. Not in a straight line. Nothing's ever in a straight line in the market. But just so you know the context. Next one comes out at noon for the afternoon. All right. So again, any questions about any of the stuff we've been covering? Let me know. So bounce limit, we're out of 1030, kind of on the cusp. So we don't have to give the bounce limit full 4 minutes, but there's 3 minutes. Counter trend, the usual attention span of counter trend sponsorship. So right at the end of those 3 minutes, we were able to sell 32.25. Nothing says you can't put a limit order out to try and sell it on a retest or higher. I don't want to be a seller necessarily at the buy signal. When we're in the context of still looking for the bias down signals test, or there's an outstanding target of any sort, probably not going to be fading or buying, I should say, counter trend move. But if I could sell something up here, it's that much closer where I know I don't want to be short. It at least tells me cover, go flat, wait for a better entry. All right, I see a bunch of questions. Let me go through those. Let's start with Solana. I don't know what you're looking at. Here's what I see. That we painted these lines earlier during Strategy Planner. This is what I see. So I don't see that it's actually breaking the flag. I'm not sure if that is the question. It's breaking the flag because I don't see that on my chart. Question, could this actually retest yesterday's low even though I said it's unlikely? So there's some words that I use and they always have the same meaning. So unlikely means unlikely. It doesn't mean impossible. So if it's unlikely that we're going to retest yesterday's low, then it's unlikely that we're going to retest yesterday's low. Then we also could retest yesterday's low. So if that word doesn't have that meaning to you, let me know what word does and I'll use that instead. But some stuff I use as shorthand because there's so much to cover. I can't define, I can't offer stop, that is, and give the definition to a word every time I use it, especially a common word. So if there's a better word I can use for that, let me know. But unlikely means it's not likely to, but it could happen. So let me know if that question doesn't make sense or the answer to that doesn't make sense at that point. And another word I could use so that it's understood right away. And not just for that question, any word that I use. If you think there's a better word, I definitely want to know it. Question, Rod, I mentioned a target of 29.50. What market is that on E-mini? That we've not exceeded that first day on. Okay. Yes. So the two charts here, we've got and by the way, first day here, welcome. There is a series of emails that you get every day for a week. Let me know if you haven't gotten those yet. You should have already gotten immediately the first one or two. But I think in that email, we do go over what we're looking at. But if not, just so you know, this is the ES. Both of these charts are ES. They're labeled up here along the top. ES, June. This is the 1 minute on the right. Here it's labeled down here. 1 minute on the right, 3 minute on the left. The 1 minute has the inflection points. The 3 minute has the bias levels. So that is ES. And 29.50, and that's absolutely right, as 53.29.50. That's, in this case, I was referring to yesterday's cash session close. Cash session close, since futures settle 15 minutes after the close, I'm referring to where was the futures contract trading when the underlying cash, SPX, was stopped. When it closed, what was the equivalent in futures? So I'm basically looking at the last bar of the day and its close, which yesterday was 29.50, 53.29.50. Okay, any other questions about any of that? Let me get the market blog updated, and I will be right back for any other questions. Right now, just to refresh, there we are, right back up to the 3-minute high to testing the bounce limit. Within a 1 or 2 point buffer, room for noise. This may very well go on to a bigger bounce. This may very well be bear flag continuation and necessitate, or at least enable, returning all the way to the upper end here, which right now would intersect around 39.50, and in other words, far exceed this short entry around 33. I don't want to be short during that. It may very well be brief and resolve right back down. That's fine. I'll consider selling that test. But if this bounces beyond 1 or 2 point buffer, room for noise above the 3-minute high to testing the bounce limit, let alone starts bouncing above the buy signal, maybe I'll sell that if I'm not stopped out. But I should be stopped out. That's I think worth considering. Can always re-enter short later, and it might be more expensive from a lower price, but at least we'll have that greater information, or more information, and to some degree a greater assurance that the decline is resumed. This signal may be there just to identify here's how much room there is for a bounce before it even begins suggesting a bigger bounce. It's not unusual at all to have 100% reliability or anticipation for, never going to have a guarantee of, meeting the bias down signal, let alone its target. That may be so likely, we may have so much confidence in that eventually happening, and yet nothing prevents a big detour. And occasionally those objectives can be left outstanding for days. So usually I'm going to be willing to entertain a counter trend move. I'm not right now, just simply because we've got so much downside force. I see the natural resistance at the gap back to yesterday's close, or the natural support there at the gap back to yesterday's close. We've just fluctuated around it. And we just rejected so much to the upside. It may very well be we come to the end of the bias window without having extended any deeper. But from this point on, I want to lose the least amount of money getting there, while being positioned short when the market suggests it is. All right, let me update the blog and I'll be right back. And by the way, Ian, I see this question. Can any form of this analysis be done on the daily chart? Yes. The daily is always a consideration. I don't crowd the chart that we're looking at because I'm trying to impart what my relevant levels are. But absolutely, the daily is relevant. That's a timing window. If you look beneath the charts, you see the timing windows labeled beneath the charts. Those are fixed timing windows during the day. The close is a timing window. And yes, so are weekly, etc. So they can be done on the daily chart, and that also allows more time to respond, react. All right, any other questions or comments? Keep them coming. All right. So the question I meant, like utilizing the 1 day as the lowest time frame and calculating the fractal nature of the 1 day versus the 3 day. Interesting. Kind of like the 1 minute, 3 minute. Um, I have not tested it, so I can't answer conclusively. But I will tell you that the patterns and the calculations that I use are not exclusive at all to the 1 minute and 3 minute. I apply them to the 9 minute, 18 minute, and to the daily. What I don't do are 1 day and 3 day comparisons. But other than that, in my opinion, professional opinion from decades as a chartist and technician, if a relationship, a psychological herd mentality relationship among price action works, it works on any time frame. So the buy signal was barely pierced by 3 ticks, let alone ever, only overlapped, let alone ever exceeded those first 3 ticks. So its resistance is reversing down. We're looking for 53.20 and lower. All right, so there's 5320, the bias down signal, the offsetting test of the bias down signal, the minimum requirement. But we already know that we're probably also heading to the bias down target. Again, not necessarily in a straight line. Let this be informative and instructive. We had already put into play offsetting tests of both bias down parameters, yet here's this bounce. No reason why that can't duplicate, maybe not identically, but something else along the way, delay the next lower low. Bounce limit is 2075 at the moment. My bounce limit is 5320 on this fresh low. Already being pierced by 4 ticks, or 3 ticks that is, with 3 minutes allowed of counter trend detouring. Now, keep in mind, look at the left chart. Look at the left chart that is satisfying the bias down signal. That's the minimum requirement. It is a requirement. It is support. It's the calculable support of prior price action, prior patterns. So it's currently producing a what I'd call an obligatory bounce, but that doesn't mean it's going to be durable or not. It may produce a pretty big bounce. It's quite natural for what has developed as a ascending triangle, but an ascending triangle continuation. This is a misnomer for the pattern, or deceptive. The the ascending triangle refers to whether it's extremes in the direction of the trend. In this case, its lows are ascending. They're ascending. Doesn't mean the pattern produces ascending resolutions. It can be a continuation pattern. It didn't have to evolve into a full-throated flag. Quite normal for a reaction back to the breakout point. The breakout point in this particular pattern around 27.50. Higher prior low in this pattern being tested right now at 25. Very normal. Bounce limit. Bounce limits can be tested arbitrarily from anywhere for 3 minutes. This may be the 3-minute high right up to higher prior low. The usual attention span of weak-handed counter-trend sponsorship about to resolve down and quickly resume the decline. We don't know. We can only trade the possibilities or the probabilities, and we can manage our risk with stops. So I've described the probabilities, different candidates for a stop, also re-entry. Any questions, let me know. So right now I am, what I'm doing is I'm creating the blog post. Members have access to the website, and they also get free email alerts that send out the blog post automatically. So they don't, if they don't want to, they don't have to hit the blog repeatedly, seeing if it's updated. It's also nice, the blog update itself is also a good summary and also a teaching tool, learning tool. The way it's presented is strategic for learning purposes. It contains a lot of referential information like relevant prices, any active patterns. So the question, are those bias signals and targets plotted by software, or do I do it manually? It is manual. It's different formula that I've created. So bigger bounce, the testing of 5320, while it is supportive, that's why it's a target or a relevant level bias down signal. It was an objective. It's being influential, higher than its first 3 minutes. If I'd wanted to, if we weren't deep in the heart of the bias window, I might have looked at where's the 3-minute high to testing the bounce limit. Call it 5325, and looked at a 1 or 2 point buffer, room for noise. At this point in this pattern, I would have called it 26. And considered a buy signal above 26. Even that's a little tight. 27.50. And obviously that would have been productive. And on days like this, wildly productive. So I'm more willing to do that on a day like this. Because just to grab a quick 2 or 3 minute detour can be multiple points easily, as this is. But that doesn't equate to reversing the trend up. It may very well. More often when I see an ascending triangle continuation, more often I'll look for a counter trend blip on the way to the fresh low, and that would be a lot more reliable for a bottom. That pattern, when you see that, actually a lot more reliable. This didn't have the false break up first, so it just doesn't have that reliability. And considering that we're still well in the heart of the bias, quasi or synthetic bias down window, I'm still interested in selling bounces. I don't really want to be waiting around for a 4-minute pullback limit test. And so in this particular pattern, I am a seller under 29. So the usual attention span of weak-handed counter-trend sponsorship is just that. It's usual. Sometimes there's unusual counter-trend, weak-handed counter-trend sponsorship. I see a couple of stock requests. Let me know if you're ready for Moderna and AMD. Question whether the false break could have been down. Presumably no, because the bias is the truth, let's call it. So presumably not. In other words, was this the false break? It's the direction of the trend. It fulfilled targets, so I don't treat it like a false break. False break to me has a specific properties to it. It may have been one and done. That definitely may still look like a false break for being one shot down and then a recovery, but it doesn't qualify as a false break or for the false break properties because of what it was doing, the context of the bias down, synthetic bias down, etc. All right, so Moderna closed overlapping my 163 target. What would be the sell in case it is the peak? All right, so just by virtue of what had a target of 141, by virtue of exceeding that, next big line in the sand was 163. And so long as that holds, we're on our way to 185, 193. So really the question is, what's the pullback limit to maintain upside momentum? Not a sell signal, upside limit or pullback limit. So nothing nearby. It's really 144, 141 to 144. That's the pullback limit while still maintaining upside momentum. Maybe preliminarily 151. It doesn't really have much predictive value. There probably would be support at 151 if it were encountered, and an opportunity to bounce. If I were looking to add, and I was assuming that this rally is going to remain aggressive, I'd consider buying 151. But under 151 still has room down to 140, 144, and without damaging the chart. All right, AMD, if AMD closes below 168 today, is it a quasi-sell? Close under 168. So, what is the reason that it would be a sell? So what I'm doing now is members can ask for instant analysis of any chart, any symbol. And so I maintain coverage on a number of stocks, and that's one. So on AMD, just let me know what was the reason why 168 closing back into 168 would be a quasi sell. All right, back to ES. Which, by the way, we're now within view of the bias window lapsing. The bias window starts lapsing at the bottom of the hour. We're within 10 or 15 minutes of that. All right, so the buy signal is lapsing. The buy signal is lapsing between 11:30 and noon. The bias down target, the offsetting test of the bias down target is left outstanding. It'll become unfinished business. Anything can happen in the interim. We could get another big corrective bounce. This pattern could develop into something else entirely. A lot of stuff can happen in the interim, but looking forward to noon and assuming that this is, even if this is just shallow, whatever it turns out to have been, we anticipate a likelihood. It's not required. It'll never be required for the offsetting test of the bias down target. But if things start going to the downside again, be it a sell signal or knee-jerk reaction to a headline, whatever it is, that's my objective. If I'm looking at a sell signal and looking at the risk reward, 5303 is my reward. That's what I'm comparing against the risk component. The YouTube room, that's going to close during the noon hour. That will close during the noon hour. So if you want to take advantage of the special, that is, here is the link again in the chat. If you think you're going to be subscribing, this is the best terms. It's got a normally a new member will still get the first term. At 4-week terms, first one will get the vidiROOM for free. Normally it's $200 per term, per 4-week term for the vidiROOM upgrade. The underlying is $175. But new members get the first term of vidiROOM free. Take advantage of this link that I just popped in here, and you'll get 3 terms of the vidiROOM for free. And that's $600 in savings. And then in addition to that, on the 3rd term, I'll also refund the $175 base fee. So your 3rd term will be totally free. But you have to take advantage of this. I'm going to be dropping another link in here with different parameters, different offer. So if you think you're going to subscribe, I would do this now because it's going to go away. You'll have the entire weekend, in fact a holiday, included to take time on the site. You can go through the knowledge base, see videos, see different setups, contact me with questions. But there's the link in the chat. Any questions, please ask. So I'll be raising the sell signal here shortly. Another buy signal, another inflection point, another usual attention span of weak-handed counter-trend sponsorship. 3 minutes, establishing a 3-minute high. We know the 3-minute high is 39. Reinforcements arrive above 39, 1 or 2 points higher, but above 39 is reinforcements. And until then, there's 4 minutes allowed of counter-trend detouring below. And I'm going to raise the sell signal to 33. Under 33, I'm going to assume that this is just another test of resistance, refueling. So remember, the room will be closing during the noon hour, no afternoon. I think we had plenty of action to be able to assess this morning and yesterday afternoon. Use the link. If you've subscribed using the link that's on the site that just anybody can access, you didn't get the special deal. Make sure you use the link that I've dropped here in the chat. At noon, I'll be publishing the afternoon bias parameters. These bias parameters that are on screen on the 3-minute chart on the left, I'll be updating that chart with the afternoon version of those 4 levels. All right, so a little noon hour noise, but still limiting basically the test of the pullback limit to 3 minutes. Grazing basically the inflection down, the sell signal, hardly piercing it, let alone even starting to trigger. Just a little bit of a detour here. So starting to put things together here. The market basically an inverted head and shoulders. Pivotal correction. It's a head and shoulders, but a little disjointed, so I actually have another name for it. We don't know enough yet to know how the session ends. We don't necessarily, even if I could tell you with 100% certainty that we were going to touch 47, which we may. There's a likelihood of it. I don't know if we peak there and reverse back down or extend higher, depending on the character of price action getting here. Any higher would depend on a couple of things. Thanks. There you go. So even if I had 100% certainty that this were extending higher to 47, kind of a inverted head and shoulders pivotal correction is what I call it. Even if I had 100% certainty we were heading to 47, which I don't have 100% certainty of, I'd still need to know the character of the advance to assess what the next higher attraction is, among a couple of other things to know. Like how we got there. Price action getting there. Nice little dip to the bias down signal. You know, if this were the morning and the bias down signal were touched but not triggered, we'd put into play an offsetting test of the bias up signal. That's exactly what happened this morning. A test of the bias up signal, more pronounced perhaps, but held, and put into play an offsetting test of the bias down signal. Well, that's a morning construct. That doesn't actually play during the noon hour. All right, so I'm going to be closing the simulcast, the YouTube simulcast. I'm not sure when, but sometime during the noon hour, the terms of the subscription are supposed to change. It should be automatic. So if you're going to subscribe to the special deal that's offered, make sure you do that pretty quickly here. And then if you hit the link later, go ahead and open the link. In fact, it doesn't process anything, but it lets you see. And if you were to hit that page, that subscription page later, those terms will have changed. They won't be as generous. So be sure to process that if you're interested at all at joining anytime soon. Cancel anytime. Put it on hold for vacation. But pretty good timing. You have the entire holiday weekend to peruse the site, watch videos, learn things. All right, folks. Any questions? Any last questions? Please go ahead and post them. The YouTube simulcast will stop stop shortly. And if you haven't yet, be sure to be a follower of the site of the channel. Follow the channel. Next time, I don't think we're going to be announcing anything. I think it's just going to be we're going to try a new kind of pop-up as opposed to a pre-planned 2 consecutive morning open house as we've been doing. Instead, doing a quick pop-up. If you're a follower, you'll be notified right away when it's available. This simulcast. So make sure you do follow the channel. Thank you. I appreciate it very much. Thanks, everyone.